Ladies and gentlemen, it is finished for the US dollar. The world has had enough of the weaponized dollar and the US using the dollar to push other countries around, and they're ditching the dollar at an alarming rate. In today's video, we're going to go over the new facts, data, and information that shows that China, Russia, and many other countries are fleeing the dollar and are now starting to trade with alternative currencies. And we're going to have a look back at history to show that the US is going down the exact same path that all other empires in history have done. They've all printed their currency into oblivion. So everyone, you definitely need to wake up to the economic reality we are in today, because I fear the central banks are going to cause a market melt-up when they reverse course, when they start cutting interest rates only to save the banks, and inflation will get out of control again, and they're going to sacrifice the dollar to do it. So everyone, without further ado, let's get straight into the news, the facts, and the data. Well, look at this everyone, solid gold in a broken world. But what exactly did just break? What just happened is the Federal Reserve and Jerome Powell just made a big mistake. They stopped lifting interest rates when inflation is still at multi-decades high. And Goldman Sachs has come out and warned that US investors are being too optimistic on sticky inflation falling very quickly. But we all know why they paused, people. Not because they think inflation is going to go down on its own, it's because the banking system was on the verge of collapse. Because what a lot of people talk about in history is what Paul Volcker did in the 70s and 80s when he lifted interest rates to 20%. But what many people don't realize is back then US government debt was only 800 billion and now it's 32 trillion. So every single interest rate hike now has much more pain. Listen to this everyone. Thus, with almost zero regard for common sense, basic maths and history, this cornered banker, aka Jerome Powell, is trying instead to be Paul Volcker, but has forgotten that Paul Volcker raised rates to fight inflation when public debt was 800 billion, not 32 trillion. So if they lift interest rates to 6%, that's going to have a much bigger effect than they did from lifting interest rates from 10% to 20% back in the 70s. But don't worry, we're going to go over what Russia and China just did in a moment. So furthermore, Volcker led the Fed at a time when US treasuries were loved rather than unloved. That is US government debt. Since 2014 in general and 2022 in particular, the level of foreigners dumping Uncle Sam's IOUs is breathtaking and makes it all too clear to any holding even rudimentally understanding of the bond market that the US will be finding its own deficits at levels of in trillions, which ends empires. Because what's one thing we learn from history, people? We don't learn from history. History doesn't always repeat, but it often rhymes, and the US is doing exactly what every single empire has done to their currency, and have caused it to go to zero. For years, the US has pretended to be what it once was, respected and credible, but its balance sheet is argued elsewhere is no different than just any other banana republic. Like the very nations Uncle Sam once mocked, think Argentina, the US has been issuing more IOUs despite a world that is buying less of the same. And keep in the back of your mind, China has nearly $1 trillion worth of these US treasuries that they could dump on the market at any time and cause interest rates to spike and cause a financial crisis. And like Argentina in 2000, the US has already begun regulating, forcing US banks and money market funds to buy its overissued debt, with the end result of simply crushing some of those banks and money markets in a toxic wave of QT. So that's exactly right, everyone. The US government is issuing this debt, forcing the banks to buy them at inflated prices, and then the central banks are coming in there lifting interest rates, causing these assets to fall in value, and this is what's causing the banks to go under. And guess what normally happens in the past? Normally a lot of foreign central banks would buy these government treasuries, these IOUs, but they're not doing this at the same level they used to. What do they see coming, everyone? And like the banana republics, the US is now in a corner wherein inflation is too sticky to cut rates, yet bank and other credit participants' pains are too high to raise rates. This is a lose-lose situation for the central banks. They only have two options: kill the currency or save a failing system. Now let's talk about today's sponsor, who I'm very proud to be working with, Monetary Gold. Because we all know inflation is getting worse and it's here to stay. Central banks have been hoarding gold to get away from US sanctions as the US dollar continues to fall in global foreign currency reserves. The Saudis are now even considering selling oil in the Chinese yuan to China because they're very upset with the US right now. So this is all spelling big trouble for the US dollar, inflation, and the US dollar continuing to hold its world reserve currency status. So like I always talk about, you need to find a way to hedge yourself against this scenario with gold and silver. Because look at this chart here, everyone. Gold is up 34% since they started the crazy money printing in 2020 alone. And look at this, silver has gone from around $12.27 an ounce all the way up to $23.72 as I'm recording this, nearly doubling. Now, Goldman Sachs, Bank of America, and Wells Fargo all actually predicted that gold will surpass $2,000 an ounce, but some strategists are now starting to call that gold will hit $3,000 an ounce, and especially the analysts at Kitco News. So if you're worried about your retirement funds being tied up in risky assets like stocks and want to get gold and silver in your IRA and your 401k portfolio, you need to give the good people at Monetary Gold a call before it's too late. Monetary Gold has no fee gold IRA incentives where your IRA or 401k can be in physical gold and silver, and you may be eligible for no fee gold IRA or qualifying rollovers. So give them a call and tell them Michael Cowan sent you on 888 304 3373, and they will give you a complete investor guide for free. And Monetary Gold is a Consumers Affair top rated IRA gold dealer for 6 years in a row. So again, give them a call on 888 304 3373 or click the link in the description below. If the history of broke empires, nations, and regimes is any guide, and if psychology of short-sighted politicians seeking re-election, i.e. bribing the electorate with mouse-click dollars over sound money is equally so, then we can almost be certain that the Fed and Uncle Sam's endgame boils down to choosing between saving the system or killing the currency. That's exactly right, everyone. This system we have is absolutely terrible. All they care about is the next 4 years so they can either get elected or re-elected. They're choosing the easy option over the next 4 years rather than planning for the long term what's going to make the country better. They couldn't care less what happens in 10, 20 years because the politicians are so old, most of them are going to be dead. For us, the choice ahead is fairly obvious, which also means that gold, which hovers like a vulture over debased currencies, will be licking its chops in the years ahead. That's exactly right, everyone. Every single currency in history has failed, and every single time people have ran back to gold because it's the only tried and true sound money. And guess who have been the biggest buyers of gold? Well, that's right, Russia and China, and they're about to make a big move. So China is licking its chops and expanding its swaps. But gold is not the only vulture about to get fatter in an increasing de-dollarized backdrop. China, love it or hate it, has been sharpening its knives and forks for years in a patient and long-sighted play to win an economic and currency war with Uncle Sam. After all, emperors like Xi can afford to be more far-sighted than US politicians who replace sound money responsibilities for easy money re-election. This may be why tiny thinkers like Trudeau or folks who probably never had a girlfriend in college like Klaus Schwab have such a crush on Xi and the kind of power he can wield without having to worry about silly little things like democratic elections. Well, I think we can all agree Western politicians are starting to become more and more authoritarian like China. And it's good to be king, but not USD. Getting back to those emerging market banana republics, which the US so often mocked, it's worth noting that Argentina has just doubled its currency swaps access to 10 billion, but here's the kicker, the swap is in CNY, not USD. For those who don't know what that is, that's Chinese yuan renminbi. And it's the very trend we warned of the moment Uncle Sam weaponized the world reserve currency, but guess what? Since the US put sanctions on Russia, this trend has been accelerating. Settlement deals like FX and energy almost certainly involve swap lines with Chinese fingerprints and with countries like Argentina and Pakistan, who hold less and less US FX reserves, which is no surprise given that few countries wish to hold reserve assets that can be turned off at a political whim. That's exactly right, everyone. A lot of countries have seen what's happened to Russia and they want the same thing to happen to them, so they're now diversifying their foreign currency reserves. In short, if the world is slowly but steadily looking outside the USD, it's because the US has slowly but steadily shot itself and its dollar in the foot since March of 2022. In fact, throughout Q1, global central banks have been engaging in record-breaking levels of CNY currency stacking, that's 106 billion yuan by the end of March via FX swap lines. That is absolutely insane, everybody, and the trend's only continuing. Today, the Chinese central bank, PBOC, hasn't listed the names of these nations and banks, but the slow trend away from an increasing distrusted USD and rising China is pretty hard to ignore as more nations are using the yuan for energy and real asset deals while holding USD or US treasuries merely to pay down its old debts. And once they pay down those old debts, they're not going to come back. And so why are they doing this? Well, that's because the rest of the world is seeing what America media outlets and store-bought DC politicians are refusing to confess, Namely, China was winning the global trade war even before DC weaponized the USD. So we can see this map here in 2000, the blue, that's the US, and we can see here the red, that's China. Now look at 2018, and this is even bigger now. We can see the blue is the US and the red is China. And again, China is playing the long game when US politicians only care about the next 4 years. But as indicated in many recent articles and interviews, the CNY is not about to become the world reserve currency. Its bond market and rule of law are decades beyond such credibility or use. This doesn't mean that China or CNY has to worry, for the yuan's increasing role as a trade settlement currency rather than a reserve currency suits China just for now. And guess what? In gold, they trust. Furthermore, China, like Russia, is fully aware of realpolitik, i.e. distrust of their laws and bond markets. They know, as George Washington knew, that nations have neither permanent friends nor enemies, just permanent interests. In other words, for China and Russia to win the long game rather than putting green, they need to win the trust of other nations by appealing to their interests rather than platitudes. And nothing holds the interests of skeptical yet USD tied nations like gold, as gold, love it or hate it, is far more trustworthy than men, be they from DC, Moscow, Beijing, or Paris. And look at this chart here of largest gold buys in tons from 2010 to 2022. We can see here Russia and China are the biggest. So China is now creating more liquidity with each passing day, as it has swap lines with just about everyone. Xi, like Putin, are also stacking gold at undisclosed levels, but even the official numbers are telling. So notwithstanding the otherwise undeniable and changing patterns in the aforementioned global FX and geopolitical stage, one merely has considered the seemingly unlimited supply of otherwise unwanted US treasuries with intrinsically limited duration, and then compare such toxicity with a simple bar of gold, which, unlike Uncle Sam's IUs, has finite duration and limited supply. Because new gold discoveries is shrinking at an alarming rate right when demand is about to rise. So in the 1990s, for example, there were over 180 major gold discoveries, i.e. 1 million ounces and higher. In the 2000s, there were only 120, and 40 in the 2010s, and none since 2019. Also think about the fact that Uncle Sam, the holder of the world reserve currency, has been hiking rates into the greatest debt bubble in once proud nation's history, thereby increasing US solvency risk and thus pointing toward dollar debasement down the road with neon flashing clarity. Gold, quite simply, is separating from real rates and acting more and more on its own as the fear trade gets easier and easier to see, and gold gets easier and easier to, well, trust. Because I'll bring up a chart here, and if you took high school econ, then you know what that does to the price of gold and the fall of the US dollar purchasing power. And again, we can see in this chart here, every single currency is falling against gold. So everyone, I know what you're thinking, well, okay, what does this mean in simple terms? Well, what this simply means is the US dollar won't crash overnight, but we're seeing more and more countries start to move away from the weaponized dollar. This is going to be less demand for the US dollar. The US dollar, I think, is going to fall, and this is going to cause all assets priced in the dollar to go up. So what I'm personally doing is not financial advice, but why everyone's running into the stock market, into the AI boom frenzy, and people are selling off gold, this is another great accumulation zone. So everyone, again, if you're wanting to learn more, give the good people at Monetary Gold Group a call on 888-304-3373. Thanks for watching. You're awesome. I'll see you all in the next video.